Greetings and welcome to this case study. Today we are going to do a case study on EURUSD. We are currently on the 1 hour time frame. So we are going to do an analysis on this, 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 and this. So on the high time frame, we've already had a change of character. As you can see on the chart here, this is where we change character and market have mitigated the supply with region this region. So we've had a change of character here too that led to this downtrend. As the market was coming down, we started having some entries. For this one, what we had here was we had a break here. But before that, luckily left a demand zone here, which is used to break this high, get this supply. So market used it as like a supply to demand, demand to supply flip. So it mitigated this. Then we had another change of character here for the entry, and another after the break we had another entry here, and that's all. Okay, before that we had another change of character here for this section, and had a change of character, had this entry, and we had another smaller change of character here, had this other one, entry here, entry down here. We also had another change of character that led to this. So let me start with this. Now we had a demand to supply flip here. Market mitigated it, had a change of character. Let me zoom in on this first part. Now this is it. Now we had this break. Markets came up and had this. This is what the market did. It used here as inducement to mitigate that flip zone. Then we change character. Now look at it. Here was our break. Here, the upside. Then the demand that led to that break is this week here. The lower time frame. That's how you see it clearly. This one. Now after that, markets mitigated this supply here. Market mitigated this supply here using this as liquidity. Then after that, market came down and broke this low. All this is in the internal structure. All these things are in this internal structure. So after it broke this low, it came up and mitigated this inside bar point of interest. That's this inside bar supply. That was what it mitigated. Targeted this low. And there's a reason why I targeted this low. We don't know how further market will either go down or go up. I targeted this low for this particular entry, this particular low. So the trade here is 1:10 approximately. 1:10. So that's what we had for this particular trade, trading from this inside bar, supply zone here. We refined it to this small candle. This small candle here. That's it for this one. So before markets even got to this point, it did something else. It was not, I think market has thought of our entry, but there was something else it did. We had a change of character here on the lower time frame. Let me zoom in. So this is it. Had a change of character here. Had a sweep to the upside. Had another break. So what market did after this change of character is that it came up and it mitigated this this supply zone here. Mitigated it before breaking again. Get another smaller point of interest here. Before mitigating another. After it had that change of character, markets came back and mitigated it. Came down lower time frame, like came up and mitigated another price zone here before dropping. I won't go too down into that because I have a lot of things to discuss. So in this one, after I had this change of card, the market broke its internal structure, came up and mitigated it. So that is something of like a continuation on the lower time frame. What happened here? It's just like a continuation. So that's it for this first one. Here the intro is very clear. Inside bar, nice change of character and cyber. But let me draw the chart so you see something where I'm. This is it. So how do I break to the upside? Uh, so demand mitigation, supply mitigation. This are main engine. So we traded from this point. Um, this thing that happened here is what is that the exact thing that happened here. So as this is like deep entry. Plus deep. So that's it for this. Let's go over to the next one. Now for this other one, after we had this break, after I had this break, market came down and it swept this low. It swept it the week on the higher time frame, but not on the lower time frame. We had a change of character and 4 hours demand. So for them, I'll show you what this 4 hours demand look like before we go to the lower time frame. This is the 4 hours, sorry, not 4 hours demand, 4 hours supply. This is what the 4 hours supply looks like. Where the market, where we took profit for this one. Let me go down to the previous time frame. So this is the 1 hour time frame. So it looks like. I will go down to the lower time frame, show you what this our entry looks like. So this is the 15 minutes time frame. Let me zoom into this area to show you. So this is what it looks like. The 15 minutes. So in the 15 minutes here, you can see that the change of character is very much visible. You can see that here's where I had the sweep. This is where I had the sweep. Market took out this Asian low, this low, and swept this liquidity. But it started adding to the upside. I will go to another lower time frame, show you what that entry, what the point of interest look like. So this is a 5 minutes time frame. I will zoom into this zone. So I'll first of all zoom into this place. See it, then I'll zoom into this. This is what it looks like on when you zoom in on it. I'll zoom into this zone to show you further. Now this is where we had a change of character. So this is where the market swept all this low, left this point of clean candle here. That was what the market. Now this market use this point as market. Use it as inducement. These are inducement in the market. So you can see a very clean candle here. This is the clean candle market mitigated. And as you can see, we had one bullish move from here. Indicated that here, this is a sign that that's what the market mitigated. Moved from there to this 4 hours supply zone. And this for this trade, what we had for this trade is 1 is to 32. 1 is to 32 risk to reward ratio. So I had 1 is to 10, and I had 1 is to 32. Now that's it for this particular second one. Let's go over to the next one to talk about what happened. This one and this one. So after market have broken this pattern, created this higher time frame supply. The 4 hours, not the refinement. 4 hours. This is what then happened. We also had the same entry we had here earlier. I have chocolate. Now this is it. So we had another change of character here too. The lower time frame. Mark it up. Now this is it. We mitigated this 4 hours demand earlier. Then earlier, the market came down a bit and created it again. Thereafter, we had a of this demand. I don't know, maybe I'll go to a lower time frame that you see what the candle itself look like. So not a lower time frame, a higher time frame. So you see what the candles look like. So this is the 15 minutes time frame. So after I had this mitigation, market came down, went up, mitigated it again, before dropping. So after it drops, it mitigated this inside bar demand before it rallied to the upside again. Mitigated this 3 minutes, this 5 minutes supply. So after mitigating that 5 minutes supply, it came down again and took out these lows. That's where we had our change of character. Now, markets came up again. There's this supply zone here, origin. See this candle. So that's why the market came. After it went low, it came up and mitigated it, and we traded to this low. So we are trading to a very swing point on the real time frame. So this one traded to the swing point, the swing low here. Swing low here. This one will trade to this demand. This one traded to this swing low. So we traded after I had this flip entry, we traded to this low. Yeah. So which gave us 1 is to, let me say 1 is to 7, 1 is to 16. 1 is to 16. Let's just put it as that. 1 is to 16. So that's it for this trade. Let me still draw that concept again. So we had kind of movement market. This is it. Add time frame, by mitigation, add this. For entry, so broke to the up, go broke to the downside. This is what we had here. Chop plus flip. This is a chop plus flip. That was what we have for this one. Same thing we had earlier too. So let's go over to the second one. What happened before we got to this low in the market, or even before we broke this low? I'll zoom into this fourth one. So for this one, I will go to a lower time frame, up to 3 minutes. Show you this entry. So, but let me talk about it here on the 15 before going down. After this mitigation, here we had the change of pattern on the lower time frame as 1 minute, 3 minutes. After the change of character, had the mitigation on the top. Now we had the same kind of slow movement here. We had it on like a shorter period of time. This one took quite a long time. Oh, this one took like 16 hours, but this one took something lesser that like 4 hours. Let me go to a lower time frame, show you what actually happened. So this is the 3 minutes time frame. So I will actually zoom in to the chart. This is it. This particular one we marked here is the actual candle on the higher time frame. I just want to show you what we had change of character first of all. This is it. Let me zoom in. Let me change the exactly happened. This is it. After I had this mitigation, we went up to this refinement. Market came down and changed character. Look out this demand zone here. It out, and I took it out, came up and mitigated this demand, so this supply. And this one I marked is a refinement as well. Inside bar supply. So that was why market mitigated before dropping. That was where market mitigated before dropping. So let me go back to the 15 minutes. So this is it. The whole okay, it's not very clear. This is the whole candle here marked out. Took the full entry for this particular one. So this is what I used. Now for this second one, for this other one now, not the second one, for this other one, it is 1:28. So this first one here, I had 1:17. This one 1:28. So for the four of them, this is 1:10, 1:32, 1:16, and 1:28. So that's it for these four. Now let's still go further to another one down here. So market moves from here and broke this low. We got down to this point. This point now is a demand zone on the higher time frame. Let me go to the time frame to show you. So this is it. This is a demand zone on the 4 hours. You can see the point of interest here. See the demand here. That was where markets slowed down. It actually took out this one. We remove it. So that's where the market slowed down, then we change character. Now we are currently on the 15 minutes. So this is what the market did. I've not really gone what I'm talking about is this one. So I've not really gone out to the time frame where it happened. I'll go down to this is a 15 minutes. This is what it looks like on the 15 minutes. I'll go down to the 1 minute to show you where this particular entry. This is the 1 minute time frame. After markets came into this 4 hours, and this is what then happened. So first of all, had this break, had this break. So market started dropping in the essential session. Now this is where the essential session ended. This is where the essential session ended, and market dropped to this point. As market dropped to this point, we had this break, minor break, that break. Let me zoom in. So this is it. This is still the 4 hours demand. So this is where the essential session. No. Okay. So we had this break, had another break here, had another break here. So it's in this break now. We had another break here. So what market did is that we changed character immediately. For this break, we changed character immediately. Got this high, took out this inside bar supply. Market came down. Market used here as inducement. This imbalance here. Inducement to mitigate this. Now this point of interest we have here is an inside bar demand. That's what market mitigated before moving. And it moves up from here to their Asian high. See, so this area now is the Asian high. There was a demand zone here, but it took it out too. So this is the Asian high here. So that was the take profit for this trade. So this trade is 1:17. 1:17. As you can see here, we had a very clean change of character. That's just to show you the concept. Oh. Something of this. This is the change of character. I'm going to put this. We mark out the point. Add a sweep to the downside. Here we now have a sweep. Then to the change of character. I had vision. A markup. Selected the nearest liquidity up here. So this is what change of character is. What change of character is. So that's it for what happened here. A very clean one. It happened on the 1 minute time. So that's it for these 5 trades. This one is to 10, 1 is to 32, 1 is to 16, 1 is to 28, and 1 is to 17. Here, that's it for the 5 of them. Our chop was flipped. Now, currently, this is what we have. So on the 15 minutes, on the 15 minutes, we've had a change of character. This trade is currently running. Had a change of character. A very clean change of character because we had a candle closure here. So we used the imbalance here as inducement. not just imbalance or inducement there. This high, this high. Where are you? Where are you? They trying to get the particular. So this is it. We came up and mitigated this inside bar and sorry inside bar supply. That's where we are trading from. And the trade is on to 17. Targeting this low. So why are targeting this low? We had a change of card here on the 15 minutes and market have not really done anything here. So assuming market mitigated a clean point of interest here, or this point of interest here, this high now did something. So we say market is going to trade from here, out this low. But since we've not had a good point of interest, market is changing character and are targeting this low. So let me show you this point of interest. This is what it looks like after I had a change of character. It's another entry here. So that's where we are expecting markets to get to as our middle time frame change of character. Then we'll trade from there to this 1 hour supply, which is like 1:45. I don't know what they said. I didn't market 1:45. Then we'll trade from this 1 hour supply to this swing low, which is 1:20, 21. So let me go up to a higher time frame. So this is what the 1 hour supply looks like. So there are lots of imbalance that the market needs to go going down. And that place is in our discount zone. This our discount zone. We're expecting markets to come up to that point or dropping. There's something of this nature. So what we're looking at is same thing that happened here. The change of character, the mitigation before, had the mitigation up to this 4 hours demand. Sorry, 4 hours supply. The expecting market to do that same thing too. This is what the 4 hours look like. Not the 4 hours necessarily, daily. So on the daily, this is what we have an inside bar supply. We're expecting market to come up to that point. Come up to that point in the market. So this one is currently running 1:17. This next expected one is 1:45. Then this one is 1:21. So that's it for this case study on EURUSD. It's a very long video. Take your time to watch it. Like I once said, this first one 1:10, 1:32, 1:7, 1:16, 1:28, 1:17. So that's the ones we took earlier. This other one have 1:17. So that's it. See you on the next case study. Goodbye.